Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. This is part 2 of a practical guide to socially responsible investing in 2025. Environmental considerations. Environmental criteria focus on how companies interact with and impact the planet. This area evaluates a business's commitment to reducing environmental harm and fostering sustainability. For investors who care about climate change or preserving natural resources, this factor is a crucial starting point. Here are some key environmental areas often assessed. Carbon emissions. Companies that actively reduce greenhouse gas emissions are more appealing to ESG-conscious investors. Initiatives like adopting cleaner production methods or aiming for net zero emissions signal accountability. Renewable energy. Businesses leading the charge in solar, wind, or other renewable technologies demonstrate a forward-thinking approach to sustainability. Investing in these industries can support the global energy transition. Waste reduction. From managing industrial byproducts to encouraging circular economies, minimizing waste showcases a commitment to protecting ecosystems and conserving materials. Imagine evaluating a company as if you're choosing a long-term travel companion. Would you pick one that's littering throughout the trip, or one keeping the environment clean? Environmental considerations ensure investments drive positive change, not harm. Social considerations. The social aspect of ESG criteria is all about people. It examines how companies treat their employees, customers, and the communities they serve. These factors reveal a company's values and whether they align with equity, fairness, and inclusivity. Let's take a closer look at social factors investors assess. Labor practices. This includes fair wages, safe working conditions, and policies that promote diversity, equity, and inclusion. Companies that prioritize their workforce often exhibit stronger employee morale and loyalty. Community impact. Businesses that give back, whether through philanthropy, education programs, or local job creation, build trust and contribute to societal well-being. Human rights. Avoiding companies linked to exploitative practices, such as forced labor or unethical supply chains, ensures you're not unknowingly supporting harm. Think of social considerations as the people factor. How a business interacts with its stakeholders often reflects its sincerity and long-term sustainability. By supporting companies that champion equality and human dignity, your investments help foster a more fair and just society. Governance considerations. Governance criteria focus on the frameworks and rules a company uses to operate responsibly. Strong governance ensures businesses are managed ethically, transparently, and with accountability, qualities that protect investors from risks like fraud or scandals. Here are some governance areas that matter to ESG-focused investors. Corporate transparency. Companies need to clearly communicate their financial performance, decision-making processes, and sustainability goals. A lack of transparency can signal deeper issues. Ethics. Ethical leadership governs everything from avoiding corruption to ensuring fair competition. It's about doing the right thing, even when no one's looking. Board structures. Companies with diverse, independent, and accountable boards are better equipped to make unbiased, well-rounded decisions that benefit all stakeholders. Think of governance as the scaffolding holding a business together. Weak governance can lead to cracks in the foundation, while strong governance keeps the structure stable and trustworthy. By closely examining governance practices, ESG investors avoid businesses that cut corners or put profit over principle. It's a reminder that sustainable success starts at the top. Each ESG component offers unique insights, but together, they create a well-rounded picture of a company's impact on the world. Whether you're passionate about preserving the environment, advocating for social progress, or ensuring ethical leadership, incorporating ESG criteria into your investment decisions is a meaningful step toward aligning your portfolio with your values. Types of socially responsible investments. Socially responsible investing, SRI, offers options for those wanting to put their money toward causes that matter. It's not just about avoiding what's harmful, it's about actively supporting what's good. From traditional investments like stocks to alternatives like green bonds or private equity, SRI gives investors a range of ways to align their financial goals with their values. Equities and mutual funds. Investing in stocks and mutual funds is one of the most accessible ways to practice Shri. These investments typically go through an ethical screening process to ensure they align with socially responsible values. For example, Shri-focused funds might avoid companies tied to fossil fuels, tobacco, or unethical labor practices. Instead, they prioritize businesses with strong environmental, social, and governance (ESG) performance. Mutual funds and exchange-traded funds (ETFs) make Shri simpler for those new to investing. These funds pool money from multiple investors, providing exposure to a variety of pre-screened companies. Options like ESG-focused ETFs or large-cap funds allow investors to diversify their portfolios while ensuring their money supports organizations committed to sustainability and fairness. Why does this work? Think of the stock market as a giant marketplace. By choosing Shri-focused equities and funds, you're putting your dollars behind companies that aim to make a positive contribution to society. It's like voting with your wallet, and every vote matters. Green bonds and fixed income options. For investors who prioritize stability and consistent returns, green bonds and other fixed income options provide a socially responsible alternative. Green bonds are essentially loans that fund environmentally friendly projects. Whether it's renewable energy infrastructure, water conservation, or reducing pollution, these bonds direct money to initiatives that benefit the planet. Governments, corporations, and nonprofits issue green bonds to support specific environmental projects. What makes them appealing is their transparency. Issuers report how the funds are used and the tangible outcomes they achieve. A green bond could help fund a wind farm or improve access to clean drinking water, creating measurable impact. Fixed income investments like green municipal bonds are another option. These allow investors to support sustainable development at the local level while earning steady income. If you're looking for a low-risk way to make a difference, this is a great place to start. With green bonds, the appeal is straightforward. You still earn a return, but your money also works to address environmental challenges. It's like planting a tree today while knowing it'll grow into a thriving forest tomorrow. Private equity and venture capital. For those willing to take on higher risks in exchange for potentially greater rewards, private equity and venture capital offer exciting opportunities for socially responsible investing. These private market investments can fund startups and businesses working to solve social or environmental issues in innovative ways. For example, a venture capital firm with an SRI focus might invest in a clean energy startup developing breakthrough technology. Or a private equity fund could partner with a company dedicated to improving access to healthcare in underserved communities. These investments often target industries like renewable energy, ethical supply chains, or social enterprises. Unlike public markets, private equity and venture capital allow investors to play a more direct role in shaping the companies they back. Investors can influence business practices and priorities, ensuring that both profit and purpose go hand in hand. It's riskier than traditional options, but it allows you to support larger-scale solutions for major global challenges. Private equity and venture capital aren't just about funding. For many investors, they represent a way to actively champion change. If public markets are the tip of the iceberg for Shri, private markets go deeper, tackling root problems with creative, impactful solutions. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.